Vinit, another important thing that's taking place is with respect to the other asset classes beyond equities. I mean, look at gold and silver. There is no stopping in the kind of rally that is unfolding ahead of us. In the last 1 year or so, I think 50% of a rally is what we've already seen on gold, and a similar quantum in silver as well. And look at it when the Nifty has almost given just a flat return. So when we look at, as an average investor looks at, gold versus silver at this point in time, there's bound to be a lot of FOMO that's existing in investors, that even at highest possible levels, when people were holding back their investments, they should have just gone ahead because there is no stopping in gold and silver. How are you addressing all those concerns of your clients?
So, I would just like everyone to do a very quick take into the past to 1935. For many years, silver was kept steady at about, gold was kept steady at about 35 ounces to dollars to an ounce. And I think around World War II, when the Bretton Woods was formed, uh, gold jumped to about $44, 42 or 45, I'm not sure of the exact number. After that, till 1969, 1967, 69, it was fairly constant. And that is a time when the US started running out of, their financial, they got into a financial mess. Their trading partners were Europe, and they were only expecting payment in gold. And then you saw a massive rally play out. So from $35 to $44 an ounce to $800 in a matter of a decade is what gold did, right? And so we are having the same kind of situation persist now. And today, when the US is cutting the rates, so we are talking of 3 successive rate cuts to to pump the US economy. You can imagine what gold would do, because from 1969 to 1981, the Fed rate actually went to 20% before they could arrest the bull market in gold. So when you move from $5 trillion in 2035 to $37 trillion in a period of 20 years, you can imagine what could possibly happen to the price of gold going ahead. So I'm just drawing a parallel from a super bull market that played out. And we are in the midst of another super bull market that lasted for more than 10 years. We don't know how much this would last. But generally, super bull markets in commodities range from anywhere above 10 years to 20 years.
Wow. So there could be a long super bull trend that is still currently underway. So do you think that even at these levels, if somebody has still not participated, one must even go ahead and do that now?
See, I think that it's very difficult to say what will happen, because we've not had this kind of picture play out.
Yeah.
So my advice would be to if you have the stomach to understand what I'm saying, then you can invest, but please don't sell your gold. Is the only advice that we'll do. Indians are very well stacked in terms of gold. And there's one more data statistics that I'd like to give you. If you ever take the total gold mine and divide it by the population, it comes to few grams per capita.
Wow.
Right? So gold is such a scarce commodity, and it used to be 24% of the wealth allocation in 1970s. So right now, only central banks are at about 20-30%. China and India population is way up there in terms of gold allocation. Everyone in India and China has gold. Rest of the world does not have any kind of gold. And so whether you accept a Bitcoin as a store of value, or that bubble also collapses, is a question mark. Until then, gold will completely keep appreciating.
If you like the video, do like, comment, share and subscribe.